Welcome to lesson 2 in this Forex price action basics course. This is lesson 2, Japanese candlesticks, and as the title suggests, in this video I will teach you the basics about Japanese candlesticks. What I do suggest is that you read this lesson at Technical Forex first, because the illustrations are very good and reading the content may give you a better insight than I can in this video, or perhaps coupled with this video you'll gain a greater insight into Japanese candlesticks. Let's bring up a chart like I did in the previous video. Australian dollar, US dollar, I believe it was. So this is the 1 hour chart of the Australian dollar, US dollar. You'll notice that price is charted with a line, and we call this a line chart. We have our price as the y-axis, and the x-axis is the date and time, and price is just plotted as time progresses. So this is a line chart, but quite often with price action analysis and price action traders, you won't actually see a line chart. You'll see a candle chart or a candlestick chart, which looks like this. So something a bit different. And in this video, I'm going to teach you the basics of Japanese candlesticks. There will be another video later on in the course that gives a bit more detail into why Japanese candlesticks are important and specific things we look for in Japanese candlesticks, but this video will teach you the basics of being able to read a Japanese candlestick. So this is a 1 hour chart of the Australian dollar, US dollar. So each of these candles represents 1 hour of price action. So every hour that the Forex market is open, one of these candles will appear. So this candle, let's zoom in. So this candle here that's currently moving, if you can see that on the video, will close at 3 o'clock. It's 2:15 at the moment. So at 3 o'clock that candle will close and a new candle will begin. So each of these candles represents 1 hour of price action. If I was to bring up a daily chart, then each candle would represent a day's worth of price action. So every 24 hours the candle would close and a new candle would begin. If it was a weekly chart, each candle would represent a week. If it was a 5-minute chart, each candle would represent 5 minutes. So every 5 minutes, 2:05, the candle would close, a new one would open. 2:10, that candle would close and a new one would open. And hopefully you get the picture. Now these candles are not as confusing as they may seem at first. Basically there are two parts, or two main parts to a Japanese candlestick. You have the body. On my chart they are green and red, so you have the body like that, and then some of these bodies have wicks. So if we look at this candle here, we have the body, and then we have this big wick at the top and a little tiny wick at the bottom. So they are the two main parts to a Japanese candlestick, the candle body and the candle wicks. Now what does the body represent? The body represents the difference between opening and closing price of the candle. So when a new candle opens, you'll get a line like this, and when a candle closes, you'll get another line, and basically they are joined and create the candle body. So if we zoom in a bit further, I'll be able to give you some examples of this. So if we take this nice big candle again, when this candle opened on the hour, price was here. And when it closed, price was down here, and that formed our candle body. With this next hour, price opened here, where price closed previously. We closed down here. We then opened where the other one closed, and closed down here. and these form the bodies. So if we have a green candle, price opened here and closed here. The next hour it opened here and closed here. And that is it. There's nothing more to it than that at this stage. The bodies are formed by opening and closing prices. On my chart, green bodies are when price has closed higher than where it opened, and for red bodies, price has closed lower from opening. These red candles can be referred to as bearish candles, prices moving down, and these upwards candles, these green candles, can be referred to as bullish candles. They move higher, so we have bullish candles and bearish candles. Prices appreciating, prices depreciating, or not so much price, but the assets. This is the Australian dollar, US dollar. So the Australian dollar is appreciating against the US dollar, and the Australian dollar is depreciating against the US dollar. And hopefully I'm not confusing you. So that's the basics of candle bodies. They are formed by the opening and closing price of the candle. So what are the candle wicks? So we have our body. Let's say price opened here and closed here. Our next candle would likely open where the previous one closed. Could close up here. Then we could have another one open here, close up here. And that's our candle body. So what are these wicks that appear above and below the candles? We have upper wicks that are above the candle bodies and lower wicks that are below the candle bodies. These candle wicks are basically a footprint created by price. They tell us where price was throughout the life of the candle. So if we go back to this nice big candle up here, you'll see that there's this nice big wick or upper wick on the candle. This means that throughout the hour of this candle, price was up here at some point, and then it came back down and has closed down here. You'll see there's a little tiny wick at the bottom. That means price was down here but actually closed a bit higher. If we look at this candle, price was all the way down here but closed up here. So wherever price goes during the life of the candle, that movement is recorded through a candle wick. So you'll see all these candles up here have lots of upper wicks. We have these upper wicks. So with each of these candles, price was up here but it closed here. Price was up here at some point but it closed here. Price was up here, it was also down here, it closed here. This one, it was down here at some point. It was down here but closed here, it was also up here. And that's basically it. These wicks leave a footprint of where price was. So if we zoom in further, you'll see that this candle is leaving this lower wick and price is moving up. If price came all the way down here and moved up, then we'd have a wick that goes all the way down here. If I bring up a smaller chart, so this is a 1 minute chart, you may be able to see some of these wicks actually being created by price and recorded by the candlestick. Okay, so this candle here has a nice little lower wick. If price moves higher and then pulls back, just like it did there, with this tiny little upper wick. You may not be able to see that on the video. Let's just watch a bit longer and see what happens with this candle. So we're coming down. This is a 1 minute chart. Can you see the wick that's being left by price from where it was? That candle's about to close. There we go, the candle closed. A candle will close every 1 minute because it's a 1 minute chart. And you'll notice that the other candle opened where the previous candle closed. Now you'll be able to see more wicks being created as price moves up and down. And once this candle has had a life of 1 minute, it will close. So price is coming down. If it moves back up, you'll see the wick that is being left behind. And that is basically it. If you have questions about this or it doesn't quite make sense, then please read the content, the written content on the site, but also bring up a chart if you have access to price charts and look at them. Just like most things in life, if you practice and apply what you are learning, you're going to get a lot more out of it. So look at some price charts and see these candles forming and work out where the opening and closing prices were for certain candles and where the upper and lower wicks were. In the next video, I will cover trending markets, which is lesson 3. If you just click on this button here, you'll be taken to the next lesson.